Hi there, Serial Trader here. I'll do a midweek update here on SPX and we'll also look at the futures chart just because I think there's a little bit more information there and then we can compare the two a bit. So since the last video, we went just a little bit lower there on Monday's open, slightly below the low we made there on Friday. Friday we went as low as 29.84, we went as low as 29.65 on Monday, but then the expected bounce did occur. So I still like that we have this initial A wave down. I still like that we have our overall 5-wave sequence off the March lows complete. And then we're now in the correction of that 5-wave sequence. So yeah, A wave down, bouncing up in a B wave. And then obviously once we complete this B wave, we'll be looking for another leg down in C. And possibly, I mean, we look at these fib retracement areas. So we have the 38.2% retrace, have the 50% retrace in basically a range from 2700 to the low 2800s. We also have the previous fourth wave of one lower degree at 2766, so basically in the middle of those two retracements. So that's a high confidence or high probability zone for this correction to retrace down to. Doesn't mean it will, but it just means technically it's an attractive area to visit. Okay, so that being said, we are looking for this B wave to complete and roll down in C. Now if I go over now on SPX here on the hourly chart, so you see we got our 5 down for A. Now here's the thing, on SPX you can easily make the case we got A, B, C up for a B, and if I even look at some AC relationships for that B, so let's see here, A off of B, we almost got to the AC equality relationship, which would have been at 31.57, went as high as 31.53, and now it looks like we're starting to roll over here. So that looks good on SPX, and you can see as far as the retracement of this initial 5 down, this B wave so far has retraced a nice deep in between 61.8% and the 76 retracement, kind of right in the middle of those two retracement areas. And again, now we're starting to roll over. So just looking at this SPX chart, it would be a fairly decent thing to say that, okay, B is in place, now we're rolling over for C. But what has me a little on guard here is I want to go over to the ES chart. So this is the S&P E-mini futures chart, ES. I believe this is the September contract now. So same idea. We have our 5 waves down for that initial wave A down. And now what has me a little troubled here is the reaction off the bottom we've had looks a little different here on ES because you can see overnight activity, whereas on SPX we don't see what happened overnight. We just see a potentially gap, right? Well, this has a lot more information. So off the bottom, I can count a pretty clean 1, 2, 3, 4, 5 up, that terminated at that 31.56 here on ES, which I think was around 31.53 or 31.57. No, I think it was 31.53 on SPX. Let's see here. 31.53. 31.53. Yeah, okay. Anyway, so ES went a little higher overnight than the actual high that was made on SPX. But nonetheless, on Tuesday, I guess before the market opened, probably on the overnight session there, we went as high as 31.57 here on, or sorry, 31.56.25 on ES. Now the thing is, we got our 5 up. So how could this whole thing, even though it looks good on SPX, on ES, how could this whole B wave be a 5-wave rally? Well, it can't. We're looking for a 3-wave rally if it's a B wave, right? So that has me thinking that based on ES, we got 5 up for the initial A of the larger B. Now we're doing an A, looks like we've got our B done, and now we're rolling down in C of B. Okay, so 5 down for the initial A. Now we got a 5, 3, 5 possibly working for that larger B, and within that larger B, it will subdivide into an A, B, C for that larger B, so 5, 3, 5, and then we'll be looking for that larger 5 down in C. So you got to keep track of the degrees here because there's lots of 5s and 3s potentially in play, but just you got to keep the degrees sorted while you're labeling, and that keeps things making sense. So if ES is indeed correct, and we do have this 5-wave structure off that A wave bottom, then that means that the high we made here on ES at 31.56, equivalent high on SPX 31.53. That means that high is not the high of the larger B wave rally. It means we got to go a little more. So nonetheless, it does look like we're going to go down here because we do have a nice corrective looking structure in play. It looks like we need a leg down here. So the B of the B appears to be in progress on ES. And then we'll be looking for one more 5-wave rally above 31.56 or 31.53 on SPX. One more 5-wave rally to complete C of this larger B. And then we'd be looking for that final move down, maybe into the 27 to 2800s, potentially, okay, in that larger C wave, potentially that larger wave too. So this is why I want to do a comparison between the futures and SPX. If you were just looking at SPX, this looks like a nice clean 5 down. Looks like we got a 3 up, deep retracement. Now we're starting to roll over. Boom, just go short, stop against 31.53, and look for your C wave down to new lows below 29.65 on SPX, right? That works until you look again at ES. So here, I mean, I just don't see a trade yet. I think we got to let this B wave play out a little more. If ES is indeed the right chart to lean on, it looks like we're going to go down a little bit here and then go back up above this previous high. Possibly do an extremely deep retrace or even almost a double top here, from that 33, from that 3200 plus area that we started this correction from. So just keep that in mind. To me, since there is some ambiguity or a discrepancy between ES and SPX currently, because of that, I would say, let's just go back to that SPX daily chart. Maybe forget trying to short for this C wave unless the setup, gets more clear. Just wait for this whole mess to play out. Wait for the potential move down in C if it happens. And if we actually get that C wave down to these attractive retracement areas, then, the play there is to actually go long in a bigger way. But right now, there's just a little bit too much uncertainty between the SPX and ES charts for me to really want to confidently, short this with any size or enthusiasm. So I'm still definitely leaning heavily that we're doing an ABC correction and that we will see lower prices below 29.65. But on a short-term basis, SPX on the hourly chart here, on a short-term basis, comparing that with ES, there's a pretty serious difference, right? So on the SPX, you can definitely make the case you got 3 waves up for B and we're done, we're going down. On the ES chart, you cannot. Looks like we got 5 up for maybe A of B. Now we're working the B of B, and then we need the C of B before actually getting position for C. So if this actually happens, okay, if it plays out this way, and we get a nice three-wave decline for the B of the B, and then we get a 5 waves up for the C of the B, and we, looks like we top out below our 3200 plus area, so the origin of this larger wave A. If this happens, then I think it'd be a very attractive shorting opportunity with a tight stop against that prior high to try and catch a C wave. But currently, you might get just chopped up trying to make your entry here, just based on the ES chart. And again, like I said, if you're only looking at the SPX chart, there's nothing to worry about. But then when you look at that ES, there is something to worry about. So that conflict just, basically tells me to stay out for now. Wait for a little more pattern development. All right, that's all I wanted to go through. Let's see what happens the rest of the week. Serial Trader signing off.